Hello and welcome back to the Swing Trading Masterclass by Wealthy Education. In this video, I'm taking a look at Dojis. And Doji is a special group of candlesticks. It's like a family of candlesticks, really, because there are variations. But basically what they mean is unchanged. So that would be a Doji. It doesn't have to be exactly open and close being even. It could be like a tick or two. You don't have to get too crazy about being, super rigid. But really at this point, dojis, you should just think of them as, candlesticks that we're showing indecision. There are, gapping dojis. So like in some assets, you'll see like a doji after a gap. That generally shows that maybe, like on a daily chart, you're going to see the market roll over. That's more of a stock market thing, but it does happen. More common dojis will be the dragonfly doji and the gravestone doji. And as I'm sure you can imagine, the dragonfly doji is bullish because, or at least it's leaning to the upside. It shows the market trying to break down, can't quite do it, ends up where it started. The gravestone doji, the exact opposite. It tries to rally, it comes back, it closes at basically the same level. Now, having said that, there are other candlesticks that can take the place of these, so it's kind of an overlapping situation. You'll hear about them later. Hammers and shooting stars, basically the same idea, except for a doji, it doesn't really kick anything off yet. And that's probably the best way to look at a doji. It is a potential signal. Some traders will come in and take a doji right away. You know, like if we're moving along, it shows that we are losing some momentum. So if we break down below the bottom of the doji, for example, they may short, put a stop loss on the other side. This is not a recommended way to use them though, because quite frankly, dojis are just a heads up. They can be a pause that only continues, or, I would say they're very unreliable by themselves. But we will show you a few examples here, and then we will show you how to use them in ways that they are a little bit more effective. So there's a doji there. Not an exact open and close, but pretty close. There's one there. This is a doji. This is a shooting star, kind of a doji. It might be a little too thick on the body here. But it does tell you the same thing. This is definitely a doji, which looked like we were running out of momentum, and we broke to both sides of it, so that shows just extreme volatility. There's a doji. There's a doji. There's kind of an art form to, there's a certain amount of artistic license in technical analysis. This is a candlestick that is definitely a doji. Some people would consider this a doji. Some people would consider that a hammer. Some people would consider it both. So as you can see, that can cause a little bit of confusion. Looking at Twitter on the hourly chart, there's a doji there. You can see, remember I told you that if you break down below the bottom of it, sometimes people will sell. Well, it would have gone against you. It would have hit your stop and kept going lower. So that's why you don't want to trade it just upon that. This is a gravestone doji that I mentioned. That shows bearish pressure, and we still broke above that before breaking down. So again, you have to be very cautious. But dojis are worth paying attention to. Because they can give you a heads up as to something that may not be quite right. There is the dragonfly doji. We rallied, gapped really, rallied, kind of pulled back a bit, and it did offer a short-term buying opportunity. Here in Cardano, same situation. You get the occasional doji. Here's one. This would be more along the lines of a classic doji. We pulled back, ran out of steam, and then continued to go higher. Again, though, if you simply put your stop loss on the other side of the doji, you got taken out before the profits were realized. That's not to say that dojis can't be very useful. They can give you an idea to maybe move up your stop if you're an extreme profit. And they can also tell you to look at other things in your system to perhaps formulate the trade. And that's exactly what we'll do in the next video. We'll add some indicators and I'll show you how you could have used these.